Good morning, everybody. It's Jack Gleason with Startuptrading.com. It is 9 o'clock in the morning, June 10th, 2020. Economic news events for the day. Before the bell, we had the CPI numbers this morning, an hour before the bell. Crude oil inventories are going to be coming in at 10:30. And then we are going to have the FOMC economic projections, the federal funds rate, and the FOMC statement, followed up by the press conference at 2 o'clock and 2:30. And then a couple of just yellow events for the Japanese yen and the Aussie dollar tonight at 7.50 for the yen, 9 o'clock for the Aussie dollar. And then in the overnight session, or actually tomorrow morning early, 8:30 a.m. Euro, we have the Eurogroup meetings, and then core PPI and unemployment claims for the U.S. market. So that's going to be interesting to see if those unemployment claims, they're expected at 1,550,000. So still, losing jobs by the millions every week. Moving on now to the indexes. There is a extension in the S&P 500, and when we have these FOMC events, there is the possibility that we maybe over the course of a couple of days, but do come into some higher time frame levels. So the biggest level I have is the extension drawn from March 29th, which is pretty far below. It's about 100 points below where we're currently trading. So, obviously I don't think that's coming into play today unless they decide to raise rates, which is most likely not going to happen. But the most immediate support level, which was what we were looking at yesterday, this is the most relevant thing to today's price action, and that is a Fibonacci drawn from Wednesday's high to high. Now we saw this trade Friday, it was front run, completed targets. Our exact high was basically that profit target, and then the same anchor new high we've had come down into that 38% retracement all day yesterday. We consolidated in the morning, and then we broke out of shorts, and we had 50% retracement longs in the overnight session and into the end of the day. We have retested that 38% retracement support level. The 50% is untested at 31.80 half. Our upside targets are 32.55 half, 32.55 half here for the ES. The VIX is kind of interesting here because the VIX has been rallying over the last few days. It has come out of what was, the lows of Friday, rallied Monday, rallied Tuesday. We actually made just a one tick new high here in the overnight session. So the VIX has continued to push higher with the index, which is definitely a sign of divergence. So I am looking at this full 50% retracement in the VIX from last week's low on Friday to the most recent overnight high, and that's at 26.35 as a potential support level. We'll see what happens to the indexes when that support level trades, but the VIX continues to make higher highs and higher lows right now with the indexes, but we have no trend break in the indexes. It will definitely be significant if we do get a trend break in the indexes and then begin trading that short in the VIX, but not unless that happens. Moving on to the Dow, our extensions that we had yesterday were drawn from the high of 26,647 to high. We traded our 50% retracement. We rallied back to basically the point we had broken down. We've just come back down into it. Now, one of the lower levels of support I'd be interested in here, and I'm going to show you what this extension looks like. It is the extension from the high of Thursday, May 28th to high. Now, we have two levels. Now, one, we have this 50% retracement, but this 38.2 at 26,925 is a pretty important level for me. It also lines up with what is a daily leg start. I'm going to show you this. Go back out to the daily chart. That 38.2 is basically the highs that were sold into going back into March, right? That white dot that you see, that is where that 38.2 is lining up with. So this 26,925 is a significant support level for me here today for the Dow. Moving on to the Nasdaq, just chugging along, ripping and roaring. We have completed a couple of profit targets here. The Nasdaq actually has a lot of profit targets up in this area. We have the negative 61 from the halfway back that traded on the 27th. And once again, these are profit targets. It doesn't necessarily mean that these are short entries. They're just targets of long setups. The halfway back that traded from the low of the 14th of May to the high of the 26th completes its negative 61 just at 10,071. So that one's has not yet technically completed. And then we had the extension from the swing high of the 26th to what was the high of Sunday night. This is what we were looking for on Monday. It was front run just a little bit, but it's been a rocket ship ever since. We broke the opposing short setup. We traded a 50% retracement long in the overnight session, and then we actually began an extension yesterday in a close, which just like the Nasdaq's been doing, this is a front run. So on this extension, the level was 39.75, the low was 47. So that was almost a 10-point front run on that extension. And then this extension, the level was a 99.40 quarter, and the low looks like a 99.43 quarter. I'd actually have to zoom in here a bit to see that low. No, it's 42 quarters. So it was a 2-point front run, a full 2 points, which is 8 ticks. And then in the overnight session, just that anchor to the new high, you can see was bid off that 38.2. So we have completions of that extension. We're going to draw that same anchor from 98.75 half to high, and that is our support zone. And I would expect that 38 to get bid. It's been bid before, but that would be our support level for the continuation of the upside trend that is never ending in the Nasdaq. Okay. Moving on to oil, which obviously we have that oil inventory report today. That will be a volatility event. We are inside of this higher time frame extension, which comes from the high of May 21st, drawn to the high of the 7th of June. We traded our 50% retracement in the overnight session on Tuesday, and then going into the morning, we retested that 50. We took off. We had a 50% retracement long in the middle of the day that completed. Our highs were that negative 61. So this 50% retracement continues to be at support level 37.55. Bullish above 36.87s. All of the setups bullish above 36.87s, and a higher time frame upside target is 41.80. 41.80. Moving on to USD JPY, which, man, this dollar is just super weak here. And I've been looking at these currencies. Yesterday we had this, and I pointed this out, but this reminds me, and I went over a little bit about this yesterday, of the false breakout that we had on February 19th. We had a tight consolidation, we broke out higher, and then we immediately got destroyed. We've had a tight consolidation, we broke out higher. Our highs are our highs are a 61.8 of an old draw. We never broke through that, and we've gone just completely reverse, and now we're actually back through that previous consolidation. There is a downside target of a 105.77, and we are very aggressively being sold. We are just developed a new extension from the low of Tuesday to low. We are straight down in the USD JPY as the dollar continues to fall, which is affecting all of the currencies. They're in some pretty significant trends right now. Our downside target is at 107.18 based on the swing low of Tuesday to low. And then when we complete that, we'll have a same anchor new low sequence. Moving on to the Aussie dollar, you have a higher time frame extension, which traded from the high of May 27th to high. Now, we ran into that 38% retracement at 4 a.m. last night, or I should say on Tuesday evening. Now, we came into the halfway back out of that level. We completed those targets. We have a valid halfway back long for the day from the swing low to high. That gives us a 50% retracement at the previous swing high of the day. That is a 69.75. A 69.75. Moving on to the euro, we are right at these highs. We have come off an extension that has a target of 114.71, and this just continues to follow that very aggressive right now it's a very aggressive bearish dollar trend. There was this high, and it's, you know, on a smaller time frame here, from the 113.10 to high. We traded it, and then we went sideways. We completed into the European Open. We had a same anchor new high that completed into the morning. We are going to pull this same anchor new high. We are bullish above the 113.40s. If we break those 113.40s, that extension, I would expect us to possibly trade all the way back to the bottom of the range, because that would be breaking an extension after a double top. So there would be the possibility of the full halfway back long if that did happen. But that is our sequence right now in the euro. It's an extension. It's a same anchor new high, but we've just run into the previous highs of last Friday and seen a little bit of a rejection there. Moving on to the pound. All of these currencies, you know, they look really similar here. We had this extension from the 124.24s. This is traded once, twice, 3 times, 4 times, okay, and we had it trade 5 times off of 38.2. We are right at the top of the range. I'd be interested in looking at the full 50% retracement from the low of Tuesday to high. That level would line up with our overnight lows. So that's going to line up with our overnight lows. There's a leg start swing mark there. That level is a 127.09. 127.09. And then moving on to the USD CAD, higher time frame, we've basically already come out of these extensions from the 136.72 anchor. If we could retest the 50 at 135.14, that would be a resistance level. Or if we get up to the 135.50 area, that is a resistance level. I don't really have anything to do down here at these lows outside of just wait for that target completion, which would be a 132.81. And if we got down to 132.81s, there is a daily leg start there, and I think we could begin to look for a possible reversal in the USD CAD. Moving on to gold. Last night we was looking for this extension to trade. It's 50%. No luck. We only bid off the 38.2. We've made a new high here, so I will just draw that, you know, same anchor to the new high and just move these orders up, you know, to the 38.2. That 38.2 is going to line up with some support now. Before it really, I wasn't really looking at it. But now that we've made that new high, I'll look at this 1727, 1720.7. All right, and gold, FOMC, you know, potentially a huge mover for it. Just a reminder what we're inside of. We're inside of this multi-month, multi-week consolidation that had a 50% retracement at 1682 with an upside profit target of 1839s. 1839s, and you can bet your bottom dollar that if we start getting above the 1750 area, gold's going to start looking like the Nasdaq for at least move up until 1838s. Moving on to silver, which is inside of this daily extension from the 1630 swing high of April 14th. Now, we've completed this once. This is the same anchor new high sequence. Its upside target is a 1957. 1957. And in the overnight session on Tuesday, going into Tuesday, we had this full 50% retracement. We spent some time. We've, 38 bid here this morning. We've kind of gone straight up. Ideally, I was just looking at this like 5-minute chart. If an aggressive entry would just be from this 1783 half to high, the 50% retracement is a 1797.8, so I would round that up to 1798. So that'll be the first level I'm looking at here this morning in silver. And clearly, this is a very powerful move, right? This is a very aggressive move higher, so that's why I'm paying attention to the more aggressive extension. But that's going to wrap up my morning trade plan. If you enjoyed this content, please give this video a thumbs up. Feel free to share with anybody who you think might be interested in learning how to trade. Everybody trade safe. Things might really quiet down going to FOMC, so have something to do in the middle of the day. Don't bore yourself to death staring at the screens. I'll share my levels with everybody in the trade room. Take care and have a great day.